Hello and welcome to another update video about Ethereum. Yesterday late or just after my last video about Ethereum, we saw here a spike to the upside. Mentioned just before I made that, or just when I made that video, in that video I talked actually about that the indicators rather suggest a temporary push to the upside, which then also happened. But I mentioned we really need to get a more substantial breakout. We need a push above 1230. Until we get above 1230, it's not really worth, considering anything like a breakout. And I also put that onto the Telegram and Discord group and said, no reason to panic. It could just be a corrective move up, bouncing against the resistance here or the trend line and then coming down again. So it really needs that push above the 1230 level. And guess what? It came to 1230 and got rejected. In the days before that, I told you that generally by looking at the pattern, I would actually like to see a move down here in the C wave of Y, which is embedded in this larger 1-2 setup, which could break out to the upside eventually. So if you have this 1-2 from the low of the 9th of November, the wave 1 indicates that possibly a trend shift to the upside could occur. And then this sort of sideways movement here could just be a correction in a wave 2. There's not too high confidence. At the moment, it generally is in these markets a little bit like, if this happens, then that. You can't really get anything else. And therefore, we just need to wait for a signal. But to fill the pattern here, the WXY, and in the Y wave, then the ABC, I really wanted to see one more leg down. And maybe this is happening now. But we haven't really broken any key levels yet. So ideally, for this 1-2 setup, I would like to see a move down to around 1130. That is what would fit quite well. But again, we need that kind of signal really of the market to tell us what's going to happen here next, because we are in a broader range. We are caught in a pattern, as you can clearly see, and it would just fit this WXY really well to get within the Y wave in an ABC, a lower C wave. And 1130 is the key support box, lower support. As you know, the yellow box is basically our support range here. As long as we stay above that level, we can focus on higher. But again, for a breakout to the upside to occur and to rally in a third wave to the upside here, we need, first of all, a move above the 1230 level. That's that wave B high here. And we need eventually a push above 1290. As long as we stay below 1290, you could argue we're really just in this broader range. And we don't really have an edge here or any kind of signal that's going a certain way. Because the problem is that with this wave count that we have here at the moment in the sideways range, it could be numerous ways this could be going. Could be a triangle pattern, an Elliott Wave triangle that would rather suggest one more low. It could be a 1-2 with a breakout to the upside. However, because this is only 3 waves up, it's not ideal. You can count it 5 waves, but then it's a so-called truncated wave, where the wave 5 is lower than the wave 3. Also not highly reliable, and therefore this is ideal for a range trader or a trading bot at the moment. But if you're a trend trader, you should wait, I think, until something is occurring here that gives you an edge. And a clear signal will occur above 1290 or above 1130. Below 1130. Below 1130, it really risks coming down to $1,000. The good thing on the Ethereum chart is, even if we do that, which we can't rule out, right? So even if we come down lower, below 1130, it would not necessarily damage the higher level bullish pattern which we have on the chart, which is, if I zoom out, and we talked about that extensively before. Oops, didn't want to do that. We've got this sort of larger 1-2 setup here from the June low, the wave 1 up, the wave 2 down, and we could rally in a wave 3. But that in this area down here, we could still short-term drop to $1,000 without invalidating that, right? It's only really below $1,000 that I think this whole context of the chart will flip bearish. Yeah, and because we can still go lower, and if we drop below that level, I think we're looking at 880 and then 650 as key support. And because that can happen, I'm very careful with dollar cost averaging at the moment. I do buy, small bits and pieces here and there, but it won't really be until we get a confirmed bottom in place that I'm going to get a little bit more let's say, aggressive on dollar cost averaging. I explained that before in videos, that in the current situation where we're basically catching a falling knife if we buy into it, it's all about position sizing for me. I want to leave funds aside for even lower prices. Of course, long term, we are in a very attractive position here price-wise, but it could take a little while to really get settled and find the bottom. But yeah, it is still this triangle pattern. It seems to be taking forever. It started obviously on the 9th of November, so it's actually not that long. We've had longer triangles before. We had this endless sideways movement, which we could also count as a triangle. But in this case, it was actually suggesting a move to the upside, which is different here, where if we count it as an Elliott Wave triangle, it would rather show another low. But again, if we do that, we can still hold the $1,000 level, so it wouldn't threaten that naturally. But also in this sort of WXY, we would expect a break to the upside. So both scenarios clearly possible. What is clear is that the longer this sideways movement takes, the market is losing its strength, and we could very well come down and break the 1130 level. But again, the $1,000 level just needs to hold. And if not, then all we have to do is to reset our trading range lower. So it really is at the moment, unfortunately, I know it's frustrating for a lot of people, but it really is like, you know, if this happens, then that will most likely occur there, because the structure leaves interpretation open, you know, for various possibilities. Generally, the Ethereum chart is still one of the best ones out there, and it is one that we can lean towards going up generally, as long as we're holding the $1,000 level, especially as long as we're holding 1130. But the problem is, and I hope you understand that on the micro here, you don't really get an edge and a competitive edge against others in the market, because the way this wave 1 to the upside occurred is only a 3-wave pattern, and it's not ideal. So what we like to do, and you know, in terms of trade setups, we're looking for ideal wave patterns. At the moment, obviously, the best chart out there that sort of what I'm covering short term is Chili's. It works out tremendously well, and this is because Chili's really showed from the low here around the 9th of November a really good pattern, and we had 2 entry points there already, and they seem to be playing out. We had a take profit position, which seems to be working out as well. So it's just a focus on best charts out there, really, because then that allows you to really trade it really well. If you focus on charts that are not very reliable, like for example Kronos, Solana, what else do we have? We have a lot of charts out there that are just still looking for lows, right? Chainlink, they don't really, you know, they basically, yeah, they don't really adhere perfectly to the trends. So you want to look for waves that are ideal. So if I tell you here we have a possible 1-2 setup, surely it can work out, but it's not necessarily high probability. We want to look for the best charts out there that are currently developing nice 5-wave structures, and Chili's is one of them. And we're just waiting for the next one, right? But here this could work out as well. It's just that this is the support area, and it can hold, of course. We are in support now. And these support areas, they allow us to set stop losses quite tight. If we want to, you know, if we want to go long here, we can set the stop loss, for example, below the yellow box, or even below the beginning of that wave 1. And that's one way of doing it, or just setting it below the larger, let's call it invalidation point, below $1,000. And if it breaks, not a big deal, because then we just reset our trading range lower. But this is a fantastic reward to risk, in my opinion. All you need to understand is that it's not necessarily super high probability because of the internal structures here to work out long. But the reward, I mean, we talked about, you know, let's say Ethereum really has the bear market bottom in already, then the possible reward, I mean, we talk about long-term targets of 8,000 to 10,000 for Ethereum, maybe even higher one day, and a possible risk here of dropping to $1,000, maybe a little bit lower, where below that you would get stopped out anyway, right? So it's sort of just that consideration everybody needs to take for themselves. At the moment we are coming down here 1200. It you know, it currently makes the appearance, or it appears to be putting that C wave in, but it's a bit too early to really confirm that. The way this looks like, but really doing micro counting here, is that this could have been a wave 1, 2, and we're now putting the 3 in due to the red candle here. Then there will be a 4 and a 5 to come down in this C wave finally, close to the 1130 level, and that will be the next key decision point to see and to know if Ethereum is really bottoming out already here or not, because if we get a bounce at 1130 or slightly above that, it would be a strong signal that we have really done a 1-2 setup here. Okay, and that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.